Hey, how's everyone doing? It's Major Tom here, also CEO and lead strategy expert at International Investing LLC. Wanted to put a little video out talking about last week and what we did that was right, what we did that was wrong, going into this next week, what I'm looking at, what I think is going to happen, that sort of thing. So, without further ado, let's get into it. I don't like to waste time. We'll take a quick look at the SPY. As you can tell, last week we had quite the little bull run, right? So if I stretch this chart out a little bit, there we go. We had quite the bull run all the way up to here and then started seeing a little bit of pullback. If you notice, this pretty much pulled back to the 50 fib. Boom, pulled back exactly to the 50 fib. Now it's at the 382. It's probably likely to go up again and then bounce off that double top at 431, if I had to guess. Important events this week. We're going into Wednesday where the Fed has to make another rate hike decision. More than likely, I would say the Fed is going to hike by a 0.25 instead of pause, purely because of how bullish the market has been. And they just want to get inflation to 2% as quickly as possible. And if they think that they can hike another 0.25 without causing a recession, they probably will, which might cause stocks to slide a little bit because some people are predicting that they're going to pause. That's kind of my outlook on it. So either way, the things that I'm personally staying away from right now are tech and being bullish on any index because I'm afraid that a hike's going to come out and smack stocks down. That's what I'm afraid of right now. Things that I'm not afraid to be bullish on are airlines. While they might go down short term, I really like the way that they're positioned into next earnings cycle. Other things that I'm bullish on are silver, banks, and energy. All right, so here's a big stock that I've been preaching on in my Discord. This is a RepX, right? RepX is an oil exploration company, and I just want to show you their earnings path. So if we move my big fat picture up to the top here, you can see the earnings dots, and this is really important, everyone. Take a look at this. They go from basically being down here to almost a straight line upwards, right? Of course, we had some faltering over here. We had a little bit of slippage here, but we had a beat over here. So it all averages up to just skyrocketing, right? When I see this as one of the only oil companies that's just skyrocketing, it sticks out to me. It sticks out to me because the oil sector is not doing so hot. So if the oil sector comes back into a bull run and this company that's clearly just whooping every other company's butt catches that sector move as well as its own earnings growth move, this is where you get stocks that just go parabolic. So this is for sure one of my core stocks right now. I actually found it from Simply Wall Street, which is an awesome tool. By the way, this is not sponsored or anything. I pay money for Simply Wall Street. I recently just bought the unlimited full-time for a year subscription. So if any of you want me to do an analysis on any stocks, please let me know. I'm more than happy to do one. I just did one for Timmy over in the Discord. Take a look at RepX. I love using this site for valuations, by the way. Fair value on RepX, $200 a share, currently priced at 38 bucks. This is one of those stocks, and I very rarely say this, but this is one of those stocks where I would be comfortable putting the entire house on. Like putting your whole house on this one stock is something that I would feel comfortable doing. That's how bullish I am on this stock. It's 81% below the fair value estimates, right? Let me see if I can blow this up for YouTube. 81% below fair value estimates. Earnings are forecasted to grow 35% every single year, and earnings have already grown 1,731% from the last year. And then the best part is, look at the revenue. Look at the cost of that revenue. Their margins are nuts. Gross profit compared to their expenses, and then look at their earnings. It's beautiful. They're earning 157 million. 157 million is what they're earning. That's their net. And what's the What's the value of this right now? Market cap 170 $766 million market cap. They're earning 157 net. That's nuts. That's like unheard of. So here's the actual right here, price wise, and then take a look at the earnings forecasts. I mean, they've got EPS up like crazy in 2024. It's like I just love this stock so much. When we take a look at their financial health, like debt to equity ratio is only 24.8%. You gotta love it. They only have $89 million worth of debt, and like I said, they're making 150 something million net. Look at their assets against their liabilities right here. Assets 536 million, liabilities 144 million. Tell me if they have a net assets versus liabilities difference of like 400 million and they're making 157 million year over year net. How are they a 700 and something million dollar valuation stock? Like it just doesn't make any sense to me. It makes no sense at all to me at all. And I think they pay dividends too. They pay a 3.58% dividend. Like, guys, this is a stock that pays you a dividend of almost 4%, and it has the capability of being a $200 stock. So, again, this is one of those once in a lifetime diamond in the rough companies, in my opinion. If you have the money to get 100 shares of this at $38, at $30, at $32, whatever the heck you can get this stock at, I recommend getting this stock because that is just an insane deal. I rarely find value deals like this, and that's just beyond amazing. There is one other stock that's a crazy deal that I will talk about because it's a State Street stock. So State Street Capital is invested in this, and that's how I kind of found out about it. This is called Inferno. It's got a market cap of $1 billion. It's currently down 14% on the year. It's trading 86% below the fair value estimate. Earnings are forecasted to grow 170% this year. So immediately the earnings jump out at me. The undervalue jumps out at me. So I'll show you the little value bar. Currently trading $4.51, fair value is at 32. This one is not nearly as good of a stock as RepX, but I like it because of what they do. So if I pull up the INFN chart, we can get a little brief overview over here. They do networking solutions, consists of networking equipment, software, and services, operates through the following geographical segments: United States, Americas, Europe. So they're basically all over the world. They do networking and stuff like that. And look, they've had profitable year over years in the past. In 2022 Q4, they had a $33 million quarter. So with some adjustments, they could turn this into a very profitable company because they have the revenue to do so. And I think that's why they're showing this as like a super undervalued stock and why State Street and a couple of other big firms are picking it up at $4.50. You know, sooner or later, Inferno is going to have to either switch up their business a little bit or dilute the shareholders. And right here at $4.50, people are now saying like, hey, you know, it's looking attractive to get in. And now if you look at the earnings dots, the earnings is expected to decline. They are reporting on August 9th, so you might see a little slight dip between now and then. So you might even be able to get a dip by at like $4 a share before the August earnings. But if we take a look at the last time we had Q2, look at what happened. So Q2 came across, right? So Q1 was low. Q2 is even lower than Q1 last year. And then Q3 and Q4 are the explosive years for this stock. Clearly they're the explosive years. So Q2 is where we're going to take our last lump here in earnings more than likely. And then after Q2, they're going to release forward guidance that the stock's going to go up in earnings per share. You're going to start seeing a slow recovery, and you might even be able to sell this at a $9, $10 per share price. And to get it at $4 a share is pretty nutty. You're not going to get a dividend out of this one, which is why RepX is probably way better. But look, fair value is 32 bucks. If we take a look back at Q4 2022, so that was on February of 22. Let's see where the stock was February of 22. February 22, the stock was $8.30-ish. Right? So if the earnings start to shoot back up to, above zero, we're back at that 0.16 earnings. You're going to see the stock back up there in that range. You're going to see it go back up to like $8 a share or something like that. And if you can get it at $4, $4.50, it's a pretty good deal. And again, while you're holding these core stocks, sell premium on them. Sell the premium. Now, a lot of you are probably wondering what my portfolio looks like. Simply Wall Street is also probably one of my favorite tools because you can actually see my portfolio. So I'm actually going to show you what I'm in right now. These are my core stocks, my core plays that I'm running the wheel strategy on. Let me just control +++. Check this out. So we got Bank of America, right? Currently 16.4% undervalued. Notice that none of my core plays, none of them are not undervalued stocks. Right? So this is my biggest weighted holding right here, Bank of America. You might be asking why. One of the reasons is dividend, right? Another reason is I can sell premium on Bank of America's shares. People are buying the calls from Bank of America right now. So I can sell these calls pretty easily. I'm making money on the 29s right now. Again, the price is $29.27, so I might get exercised on those, and that's okay. If I lose my Bank of America stock, I will have made more than likely 5 to 10% on all of my shares. And again, it's a 24% weighting on my core stocks holdings. Now, one of the things to keep in mind is that this weighting right here is a little skewed because Simply Wall Street can only recognize the stock that I have in my account. It can't import my my options. So I do have spread, like half of my portfolio is spreads, and Simply Wall Street can't even see the spreads that I have. So it thinks my portfolio is essentially like half of the value that it actually is. But so just keep that in mind when you're looking at this stuff. Like the information might just not be 100% accurate, but it's the stock values that are really important and the weighting. So look at RepX here. 81% undervalued. Second largest holding. Remember how I said RepX is probably one of the stocks that I'm most bullish on? And again, the total return that I have on this is only 6.6%. So you could get in right now and you're not going to be beating me, or I'm not going to be beating you or have a leg up on you that much. 6% is very small when the stock's 81% undervalued. JD.com, 38% undervalued. Currently trading at $36.58. I'm making money on the $37 covered calls in this stock. I got put the shares on JD.com because I was short a put at like 32 bucks, 33 bucks. So my average price for this stock is like $32, $30 a share, which is pretty crazy. And, even though I got put these shares, I'm up 6.3%. So one of the biggest things that I can preach on this channel is sell naked puts. If there's a company that you want to buy because it's undervalued, JD.com was trading at $34 and I saw it was 40% under fair value. That tells me, okay, I can sell naked puts on this stock at $32 a share, which is $2 below its strike price, where I'm comfortable buying the shares at that price. And what happens? I make 2% on my collateral that I tie up. I get to buy JD.com at a price that I'm willing to pay for it. I get it at a super undervalued rate. Now all the shares that I was put are up 6.3%. That's massive. And I'm selling covered calls on those shares, making another 2%. So this $3,700, I've already made 4% on just the naked puts and covered calls. And I'm up another 6%, 6.3% on the shares. And it's still 30, 40% undervalued. This is why the wheel strategy is so good, guys and girls. It's so good. You add all that up, you're at like 10%, 15%, something like that, and it's been less than a month, and this is $3,700. That's nasty. That's nasty stuff. And look at this, American Airlines. American Airlines right here. We got 200 shares of American, and I like to sell naked puts below $13 on American. Probably 14 now that the price is up at $15.50. I'm not really sure where they're at without looking at it. But yeah, check this out. I'm up 9% on my shares. Like I said, airlines are very, very bullish. They're going to a bullish earnings season. I wouldn't be surprised to see American pop up to $18, $19, $20. And honestly, I might lose my shares due to my covered calls at $16, but that's fine. If my covered calls get sold at $16, I'm going to be up 10 to 15% on this position and sell all of my shares at a great, fantastic price because I paid so little for them. And then look, here's AES. This is another energy company. Fair value for this is roughly like $22. I'm kind of just holding this one. I believe it has a dividend, and I'm selling the covered calls on it as well. So we're up very, very little on this play, but we also have the premium and everything to take into account as well. Again, here's my Inferna that I just recently bought. It's 86% under fair value. Bought it for $4.50 a share. I know I do have another buy order in for a couple more shares here. Notice I'm at 427 right now. I actually have a buy order in for another 14 shares because I sold naked puts on it right before close on Friday. I am willing to buy another 400 shares of Inferna if need be, but I have a naked put order in at $4 strike. So if Inferna falls to $4, I'm going to own probably close to 1,000 shares of Inferna, and I'm perfectly fine with that. I'm selling covered calls at $5 a share, and I'm riding this puppy up to $8, $9, $10, $30, wherever it wants to go for me. Valley Bancorp. This one I'm almost certainly going to get exercised out of my covered call position because I sold covered calls at $8 a share. Again, I got into this stock when it was like $7 or below $7 because Michael Burry did. It's one of his biggest holdings. And that's another thing that Simply Wall Street is so good at, and what I've started to do as well is I can see all these fund managers on Simply Wall Street and what their holdings are, and next to their holdings I can just look them up and see like how undervalued they're projected to be, and then be like, okay, I'm getting in on that because it's super undervalued. I know why Ray Dalio bought that stock because it's undervalued and it has a good dividend, right? I know why George Soros bought that stock because it's undervalued, it's got a good dividend. Look, investing is one of those things where we all can feed off of each other, we all can give each other ideas, and not every investor has to go and recreate the wheel every time they do research, right? Half the time, my research is just looking at what all the big guys are doing and just copying their shit. Like, it's a very, very simple game if you really think about it. It's like, you know, the biggest thing that I can say is just don't follow the line. I mean, Warren Buffett and Charlie Munger will tell you, like, they trade, and George Soros as well, they trade all off of math and fundamental value. That's all they trade off of. So I know a lot of traders trade off of the trend lines and all this other mojo and algorithms and all that other shit. Let me tell you something. No algorithm can tell you when a company is just going to crush earnings by 75% and have like an 80% beat. No algorithm can tell you that. But what happens to the price when fundamentals catch up? Crazy stuff happens to the price. It breaks the algorithm. It breaks past Bollinger Bands. It does crazy stuff. So the biggest thing that I can recommend is watch the sector moves, look at what the big investors are getting into and out of, and try and figure out why all these big investors are doing what they're doing. That's the biggest thing, because the first thing that I noticed, especially at this exact time, is Burry is buying a lot of cheap regional banks. Munger is buying a lot of cheap regional banks, specifically Valley Bancorp and PacWest. Those are the two biggest ones that I see on everyone's portfolios. I do have PacWest in the form of put spreads, so bull put spreads. That's why you're not going to see it on this report right here, but I am big into PacWest as well. And of course, you have Snapchat here, 75.8% under fair value. I was surprised to see that, honestly. But I know Snapchat has the ability to be a $15 stock. And Snapchat is one of those companies where they don't have a whole lot of vertical development to go, but they also have a lot of ways that they can cut their expenditure. And if they cut their expenses, they can be extremely profitable. And if they look at reinvesting their money that they do have, their cash that they do have, or acquiring something else, that's pretty much the only way that they can grow their business in my eyes. And that's fine with me. Oatly is one of those stocks where I'm kind of just exposed to Oatly because it's a $2 stock and I can own 400 something shares for less than $1,000. By the way, if you have a small account, Oatly is the stock for you. So Oatly manufactures and sells dairy products, and it's a company that Simply Wall Street can't put a value on for whatever reason. I guess they don't report enough information for them to put a value on it. But I think Oatly is undervalued. Um, I'll show you. So take a look at their earnings dots. We saw them come from this V-shape down to start climbing back up. That's a good recovery signal to me. And again, look, Oatly was a $4 and $3 stock at one point, and I can sell covered calls on Oatly when I own it. And with Oatly, the covered calls are at the dollar mark. So I'm selling $3 covered calls right now. And again, I'm able to own a crap load of shares of this stock for close to nothing. That's the biggest thing for me. I can own a ton of these shares for nothing, which means I'm making premium, premium, premium. Look at these 400 shares that I have right here. That cost me less than $800 to buy all 400 of those shares. And I'm short naked puts on Oatly as well to buy more at $1.50, which probably will never execute. And that extra premium, what did I do? I used it to buy more shares. Notice how I have 423 shares instead of 400? That's because I reinvested the premium that I made on selling the options into buying more shares. So if my $3 covered calls on Oatly ever got exercised, that's fine. I still have skin in the game. I still have my 23 shares. I can choose to sell them at that $3 price and make even more money, or I can just hold on to them forever and just know that I'll always own a portion of Oatly stock for free thanks to my, premium selling strategies. So another big thing that I wanted to show on Simply Wall Street while I'm on this website, because it is an awesome website. It was a little pricey before, but now that I'm making quite a lot of money off of my little nest egg, we are going to talk about how we can find um, sample portfolios. Here we go. So you're going to go to the Discover tab if you're using Simply Wall Street. Go to Sample Portfolios, and I'll kind of show you like what I mean, where I can just look at other people's portfolios here. So Charlie Munger, he only has 4 stocks right now. Let's take a look at what they are: Bank of America, U.S. Bancorp, Wells Fargo, and Postco. Some people wouldn't even know what Postco is without looking at Charlie Munger's portfolio. That's the craziest thing. Is like, I didn't even know what this company was. And Simply Wall Street, I don't even think can price this company on fair value yet. Like, it has no idea. Okay, so fair value is like $70, currently priced at $76. So it can price its fair value, but still, like, many people wouldn't know what Postco even is. But we'll go back because Charlie Munger is probably not that great of an example, but it does show that, he's mostly into banks. Soros is another one that I really like to look at because his picks are just really, really strange. A lot of times people don't even know what the stocks are. So like Gen Digital, this one right here, trading 24% below fair value. Earnings grew 61% over the past year. Earnings are projected to grow this year. It's stocks like this where like, look, it's 24% under fair value, but no one would have known what Gen Digital was probably without looking at George Soros' portfolio. That's the craziest thing. And I could pick so many of stocks that are exactly like that. Like, I don't know what SelectQuote is. I don't know what MGIC Investment is. I don't know what Truist Financial is. I don't know like any of these companies without looking at his portfolio. But because I looked at his portfolio, I could now click on these stocks and immediately like give them a fair value estimate. And the other thing is I can see exactly how much of his how much of his portfolio each stock is. So you can see right here, he's got a massive loss to LBRD.K. Let's take a look at LBRD.K to see what that is. If we can look that up, there's got to be a reason why he's so leveraged in Liberty Broadband. Price to earnings ratio is below. Earnings forecasted to grow 10%. Earnings grew by 5%. Interest payments are not well covered by earnings. So fair value on this stock is only $7.66. Its current price is $74 a share. So that's probably why Soros lost a lot of money on this stock. It looks like they just kind of blew up. Looks like it's a financial company that just kind of blew up. But that's how I do my research. That's one of the major ways that I do my research now. Of course, I still have my spreadsheets. I look at this every once in a while. I am currently in a Twilio bear call spread because if you take a look at their stock, right now it's trading at $64 a share, which is a little insane. And we take a look at their next earnings dot, it is actually below where they last reported, which is bearish to me. Also, I'm a little bearish on the overall market right now. So I just feel like, I don't think this stock is going to break its resistance up here at 80. I currently have I believe I'm currently positioned at short the 74 or 76 strike. Either or, I have plenty of room for Twilio to go up if it wants to move up that way. But that option expires on June 30th, and I don't really intend on closing early unless I can get 50% sometime next week. Maybe a little over that. And, we're just going to ride this thing out. But that's just some of the plays I'm looking at, ladies and gentlemen. There's nothing that's really super jumping out at me. I would like to stay positioned a little bit safe going into the Fed decision because I think if they decide to rate by 0.25, you're going to see a pretty big pullback. I'm also looking at the VIX right now. VIX is at what I believe to be one of the all-time lows, which is a little insane. Whenever VIX gets super, super low, you tend to have crazy spike in volatility. Like, take a look at VIX down here. Consolidates low, crazy spike. Take a look over here. Consolidates low, crazy spike. Consolidates low, crazy spike. Consolidates low, crazy spike. So you kind of see the pattern here. Like, here's another one. Consolidates low, crazy spike. It's like they can only hold the VIX down for so long. And, I don't want people to get trapped in this, but, like, look. Consolidates low, a little bit of a spike. Consolidates even lower. How low can we go? We just broke the bottom support right there. The next low is at, like, what, $9? $9 is the next low? Take a look. The last time the VIX spiked from $9 was on 8 February of 2018. February of 2018. Right here. February of 2018 was this big drop right here. That was the last time VIX jumped off of that low. The overall market went from $287 down to $250, so lost $30 in valuation seemingly overnight. So just keep that in mind. Again, we're kind of have a double top here. We're kind of bouncing off of a key resistance level on the SPY. I'm super standoffish to get bullish, even though I don't see a whole lot of good bear arguments other than, hey, we might get a little bit of a rate hike. But keep it on your radar. If I was not in any positions right now and I was looking to get in positions, the only thing I'd feel comfortable getting into is banks. And that's literally it. I only feel comfortable getting into banks. Even if they rate hike another 0.25, it's not going to affect the banks that are currently surviving. And I believe all the banks that have survived right now are fairly safe. Again, the banking crisis was limited to the California Fed branch. All of the failed banks have been inside of the California Fed branch. It tells me that the California Fed branch wasn't doing their job in regulating these banks, and it's just clear and evident. I don't think that this is a banking contagion. I don't think it ever was. I don't think it was ever a risk of being one. Um, so I just want to put that out there and clear the air on that. But that's currently my outlook on where everything is. Again, if anyone has any questions, feel free to reach out in the Discord. Oh, by the way, international investing, we have just talked to our business lawyer, the lawyer that set up our firm and everything in the state of New Jersey. We're going over some legal documents right now, but we want to provide investors with the ability to invest in a hedge fund if need be, or if you want to. I know a lot of hedge funds have minimum requirements like $100,000 or $250,000. International investing is nothing like that. I've always said that I never want to be anything like that. Um, and when I did start international investing, I tried to move away as much as possible from the paying for investment tools on YouTube type of person and moving more towards a more established professional firm. Again, I make all of my money from trading now. I don't need to go out there and get a bunch of other people's money from investment services and stuff like this that may or may not work. Like, I put all my tools out there for free. So if you want to use the tools that I use, it's free, except for maybe Simply Wall Street. I don't own that, but if I did own it, I'd make it free, just to put it out there. But we want to be able to give investors the ability to invest with a hedge fund. I've always wanted to invest my money with a hedge fund, and before I put all the time into learning how to trade and doing it right, I took my losses and everything like that. And there was a time where I took so many losses where I was just like, I wish I could just invest what I have into a hedge fund. Um, but I couldn't meet the minimum capital requirements. I was like 24, 25. So look, international investing wants to give people the ability to do that. If you know anyone that might be interested, feel free to reach out or whatever. Many of you have my contact on Discord, but our minimum capital requirement is likely going to be $5,000. We're going to guarantee a 2% return on investment. So regardless of how the firm does, if we choose to blow up like Melvin, which would never happen, where we lose 40% of our total firm overnight, all of our investors are going to be protected and still get their guaranteed 2%. That's just the bottom line. And now a lot of you are saying, oh, but I could just invest in bonds and make a better return. That's true, but it's not just the 2% that we're guaranteed. The 2% is guaranteed, and then we are also going to be giving out profit sharing on top of that. So let's say the firm makes 30% in the year, right, after paying taxes. Well, we're going to do weighted profit sharing with all of our investors, kind of like in the form of a dividend. So instead of earning 2%, you're going to get 2% plus a portion of the profit that we made for the year. So you might come out to like 10%, you might come out to like 8%, you might come out to like 30%. You never know. It depends on how we do in the year. Again, the fund mostly focuses on selling premium on options and investing in undervalued companies. And the more that I've invested, the more that I have gone long on options and taken crazy losses and making crazy gains, I've noticed that this is the easiest, most consistent way to just make money. And you don't need a whole ton of knowledge and expertise to do what we're doing. But this is the safest way to make consistent compounding interest. And a lot of people will come to me and be like, oh, well, if your fund's doing so well, why are you seeking outside investors? And, great question. The only way that I can grow while maintaining my safe compound interest and compound gains every month is by taking on outside capital and giving them a guaranteed return plus some profit sharing, because I don't want to give away any equity. I know this company is going to be big at some point in time. I know that I can grow my initial investment basically everything that I have into something massive. I know that I can do it. It's just a matter of time. I'm already doing it. I was profitable last month after paying all the business starting fees and everything like that. We finally turned a profit last month after paying all those fees from months ago. So like it takes 2-3 months to set a business up officially. Paid off the business fees, paid off everything, paid off the bank account fees, paid off the brokerage fees for live data, paid all that stuff off. And we're making money in 1 month. 1 month. So imagine what we can do in 11 more. Imagine what we can do with outside investor capital. Because I don't want to have to make my trades more riskier to make more money. You get what I'm saying? I would rather just take on investor capital and increase my leverage, so to speak, and keep my risk the same. Because this kind of risk is working for me. I don't stress out at night. Every morning I wake up, I turn on my brokerage app, and I see a nice little 1%, 2% gain. It makes me happy. I really rarely ever see our account red on any given day, and when I do, it's like 1% or it's hardly anything. And I like that kind of trading. So if you're interested, or if you know anyone that might be interested, let me know. Again, the minimum investment is going to start out with $5,000. I would go lower, but you got to keep in mind that I have to get that money. I have to wire it to a bank or transfer it to the bank. Then I have to transfer it to the brokerage app. Then I have to keep a spreadsheet of everyone's weighting, because all the money has to be traded under one brokerage, the business LLC brokerage. So all the money is basically in a pool, and I have to keep track of exactly how much capital is allocated from who, right? So I have a spreadsheet that keeps track of everyone's contributions, everyone's contracts, everyone's holdings, and I then manage that spreadsheet. So at the end of the year, when everyone has to get paid out, I know exactly, okay, this person was this percentage of the portfolio, this is how much profit sharing they get, that sort of thing. So if you know anyone that's interested, let me know. The paperwork's being finalized. We should be ready to take on investors within the next month. Super excited about it. I didn't even know that this was possible about a month ago, 2 months ago. I don't even know if it was legal, but it definitely is. And I couldn't be happier. I really want to grow a reputable hedge fund, and I really want to be able to be looking at people 2-3 years from now with hundreds of investors, thousands of investors, and be able to do crazy things at the end of the year, like giving back to the community, giving back to people in need, giving back to charitable organizations with the fund's money, and of course, making all of our investors' money, bringing back in happy customers year over year. That's what I'm looking to grow. So I didn't come here to just be another YouTuber. I didn't come here just to make little investment tools and make some, $5 here, $10 there. I came to be a very big successful hedge fund, and that's what I'm going to do. So thanks for watching my videos. Thanks for the continued support. And as always, I'll see you next time. Thanks.